Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we are going to be going over Free Cash Wednesdays, the 3-day trading templates, my two favorite setups, Free Cash Friday, Free Cash Wednesday, day 1, day 2, day 3. And before we get started, just reminding traders that are new or who may just stumbled onto this video that these videos are in a playlist called Everything You Need Is in This Playlist that talks about timings, levels, behavior of price, the templates, the timings of each session that I would focus on depending on where you're located and trading, and then the type of setups that I am looking for, the trading setups specifically, the pump and dump, dump and pump over a 3-day template into the session that I'm trading. 90% of my trades, 99% of my trades are New York session. And once or twice a week I will have or look for an opportunity in the Asian session. So everything you need is in this playlist. We'll be adding this video to that playlist. Let's get started. Now today we're going to be going over the templates from this week. Today was Free Cash Wednesday and tomorrow is Thanksgiving Thursday in the US and Black Friday. And so for me the trading week is done, and as I talked about in the last few videos, for traders that are new or you're struggling for consistency or still 50-50, I would focus on Wednesday and Friday. Day 1, day 2, day 3. Wednesday is day 3. Wednesday is a reset and heading into the closing range of the week, day 1, day 2, day 3, for looking for parabolic opportunities on Friday. The two types of opportunities that I am looking for when I come to the market are either a parabolic trend trade, day 1, day 2, day 3, blowing off in the direction of the trend, or day 1, day 2, day 3, a parabolic reversal trade, reversing into the initial 2 days of movement, which can be part of a larger big template, a weekly, a breakout of a high of a week, a low of a week, that sort of scenario. But I'm more concerned about the type of setup. And so we'll just review that quickly. Again, we've gone over this in several videos in the playlist. But my main thrust is whether it's a 3-session setup, a 3-day setup, I'm looking for the parabolic opportunity. This is the type of opportunity that I'm looking for when I'm going to the screen. This is we can have a Monday, a Tuesday, so we've got our day 1 break. We might even have a breakout, it doesn't matter. That's our opening range. So again, all of this is covered in the other videos if you're new to the channel. And we've talked about this repeatedly, but just focusing on 90-10 trading setups. Not trying to me coming to the market each day and trying to trade a market, trying to trade moves, because every day the market is different on one instrument because we have templates. And there's daily templates or weekly templates. I'm looking for 3-day setups because when they give me a parabolic opportunity on a Wednesday, a Friday, this is what defies all logic. So I want traders that have been following me for a while, you see it clearly. You see markets that you get into, that it follows your system, it follows your trends, it follows whatever you're trading, and traders get into markets and they buy and hold, or they're selling and holding. They want to catch the high of the week or catch the low of the week, and it works. But on day 3, on a well-engineered template, it defies all logic. Now there are going to be markets that just go on extended periods of time in one direction. Japanese yen's classic for that. And then there's intervention by the Bank of Japan, and they'll spike at 200 pips and wipe everybody out. I'm in the market for that hour and a half, whatever that is, depending on the template, the setup, because I'm going to work in my work window, my New York session window. I take my trade. If it's a session trade, it's whatever size is dictated by that setup. Or if it's a 3-day template for a high of week, low of week opportunity, or low of week, high of week opportunity, or a measured move opportunity, which we'll go over again today, that's sizable, but I'm locking in the money. Like, that's my work day. I'm putting that whatever size is dictated by that trade setup. And then I'm taking the money. I'm done. That's it. I'm here to make money, not to try and hold on for something as long as it goes. Size is what I'm focused on. What opportunity is allowing me the 90-10 possibility / probability of making as much money as I can while still controlling my risk, but also understanding on where to take my profits. Knowing when the trade is not working as it should, cutting it, and either walking away or waiting, sitting on my hands and waiting, whether I'm in too early, the timing's wrong, there's news coming up, all the things that we talk about repeatedly with psychology. And most of the reasons that traders are unable to be consistent is because they're going to the market each day trying to trade movement. They're not actually understanding a setup, what a setup actually is. But when you're trading a setup that it's easy to make money on, then you understand that what I'm focused on, my job, is to find the instrument that gives me those setups that it's easy to make money on. And then trading those only, where it's easy to make money on, zero stress, very little heat, done with quickly, I can size into them, and then I walk away, shut down my computer, and get on with my day. So the 3-day setup, the 3-session setups, Monday's opening range and initial balance. That sets our tone, whether we're in a market that has day 3 longs, day 3 shorts, a first red day, we can be on the backside on a Wednesday, Thursday, Friday, a first green day, or we have an inside day false break trend trade reversal, which we will look at oil today specifically because it offered traders both opportunities, an inside day trade on day 3 as well as a reversal parabolic trade after major red news in the New York session. So let's take a look. Just before we do that, I want to remind traders the type of opportunities I'm looking for. We have a pump for a dump. And ideally, when I'm looking for that pump and dump, I'm looking for the parabolic move. The parabolic move is where I can size in. So sometimes the price action on the front side of day 1, day 2 is good for session trades. But when we get into the day 3, it wipes out the entire move in 1 or 2 hours. We've talked about the weekly templates. The same thing can occur on a dump and pump. We saw that set up on the Japanese yen, the reversal, and then a day 3 parabolic move in the New York session that went back to the high of the week. London put in a peak formation high. They dumped it down. We got a first bar entry after major red news that continued for a first bounce entry after major red news that continued the day 3 reversal trade. Pump and dump, dump and pump. Those are the 2 types of trades. No matter what setup I'm looking at, it boils down to either a dump and a pump or a pump and a dump. I'm not going to spend a lot of time on each pair. I'm going to go through the major pairs. I want to show everybody the big picture template first. So obviously we can see the Japanese yen Monday, Tuesday, Wednesday. We spoke about this yesterday. Gave a great parabolic reversal trade in the U.S. session for a session trade. Monday's day 1. That's our opening range. So I'm not even considering the left because I'm reinforcing to every single trader out there. If you're struggling, if you're not consistent, if you are getting chopped up, you're getting in too early, you don't understand the timings, go back and watch the videos. We had major red news. Monday's the opening range. We have breakout traders in the market. We have a reversal day. We have a market that's broken the high of the day boundary. And as I repeat on a day 3, we can be looking at a couple of potential measured move opportunities. We have the previous Monday's low of day breakout level and the high of day from Tuesday as a potential level of a consolidation for measured move targets. Or we can simply use the levels that are already in place where we're going back towards the high of the week. Friday's closing price is a potential first level of resistance. So we're on day 3. We've already had the reversal. Now we're targeting the high of the week. The high of the day, obviously, is our initial breakout level. So for traders who are in the Asian session, they may have been looking for that continuation opportunity. Our universal EMA out of the playbook. We had major red news in this session. So I'm going to repeat that when I'm looking at a day 3 I'm looking for a 3-session day 3 opportunity, because this, at the end on the U.S. window, after major red news, that's, in most cases, we can see the beginning of the move in London and the continuation, the low-hanging fruit from the playbook continuation in the U.S. session. But at the end of the U.S. session, that will essentially, on most cases, if we have a reversal day or a trend continuation day, that will be the session that moves. So session 3 on day 3. So we had major red news. The market broke out. So the market's already in play. And I'll just back this up to the 15-minute chart, because I'm going to answer a question that I get repeatedly, because I tell traders that you're inside on it. Some traders want to short this because it's broken the high of the day. So understand that you are, number one, you're inside of a failed breakout from day 1, opening range, initial bounce. Master that, and then understand what that means. But you're also inside of the high and the low of the new week. So when you're inside, as I've repeated, you need to be in line with a move, if you're trading on the inside, if it's going parabolic, in the direction of that existing move. So now we have, obviously, a new day count can be formed once this breaks in a new 3-day template. I'm not going to get into that. Go back and watch the previous video. Wednesday and Friday are day 3. Point being is that we're targeting back to the high of the week. We have breakout traders in the market of the break of Friday's low on Monday. We have breakout traders in the market on the break of Monday's opening range. Where is the money? We're going back up to the top, potentially. First area that this trade could find resistance is Friday's closing price level. Go back and watch the video on levels and the importance of closing price. We talked about that, high and low of the day, closing price. Those are the 3 levels that I look for trade opportunities at. Those are the specific levels that I will look to trade from. If a market breaks out and it's a reversal, we redraw our levels, meaning that in this particular case, London has put a new high of day in place. We've broken out, because there's only 3 things that markets do. They break out, they pull back, and they continue to trend. They break out, they pull back, and fail. A reversal, which is what we saw on yesterday's 3-session New York reversal trade. Broke out in Asia, put in a peak formation low. We traded back into that peak formation low in the London session and made a lower low. And then we continued to auction into that before engulfing in the first hour, trading back into it in the New York Open, and then continuing back through that breakout trader to the high of the day. So breakout traders who are in the market, if they're entering in on longer time frames or even in this existing move, have either been stopped out or they are now holding on to a loser at the low of the week. So our simple criteria out of the playbook 5-minute universal entry criteria, we had a short squeeze, first bounce opportunity on a shorter time frame. But just coming back to understanding major red news, this is 5 minutes after major red news. So 1 minute after major red news, I will look for opportunities, which I did on this morning's trade. My point, though, I've told several traders repeatedly, don't bother with the news, because if you're not experienced, you're not consistent, you don't have the, I suppose, consistency there, don't worry about it. 5 minutes after the news, 1 minute after the news, 5 minutes after the news, go back to your original thesis. Breakout pullback, short squeeze, trend continuation for a parabolic trend trade on day 3 on the Japanese yen. Larger template, we'll go back to our 15-minute chart, is a dump and pump day 1, day 2, day 3 template. This is the US Swiss, an example of a trading range template, day 1, day 2, day 3. Now I want to, we'll look at this briefly. This is what I would consider to be a lower quality, not so much lower quality, but a less of a as well as good as a probability type of template, meaning that I would prefer to choose something like gold or the Japanese yen or one of the other crosses that we'll look at as a better risk reward opportunity. The Swiss franc often moves well in London, and I don't often trade this pair, but we'll walk through each major pair and show the trade opportunity that may have presented. Now, day one, day two, just let me paint this picture. Understand, so people are marking off all these areas inside and they're trading inside and all that stuff. No, for me, it's this: day one, day two, day three. It's a low of the week buy opportunity in the session, in the timing window. What time was it when it got there? Right at major red news. What did it do on the day itself? What type of chart did it engineer? Higher highs. Now, higher highs, if you're new to the channel, go and watch the other videos. Higher highs on the inside is a dump and pump template on the day. So we have a 3-day template, but we need a well-engineered chart on the day itself. We have the dump from the London high of day into the US window, major red news. Right after the news candle, we already have an engulfment, a 3-bar reversal at the low of the week. Remember our opening range initial balance. This is a trading range reversal trade. So you're not going to get a trend trade when you're in a trading range. You're in a high-low trading range. It's still going to be a 1-bar stop. You can use the news candle or the extreme. Traders have the option. And again, we're targeting minimum of the high of the day, high of the week, which is our Monday's opening range high. We can project that level across. And even when we trade through that level, the market doesn't quite get to the quarter level numbers. Traders can cut that trade if they've not already walked out of that and just locked in the money. But just a perfect example, again, as I reinforce, I'm in the market for that trade if I'm in this instrument. That's it. Then I walk away. I don't hold on to this and hope that it keeps going. Once it clears through this level, what time is it? We're into the third hour. When can a market reverse? Beginning or end of an hour. And coming back to understanding other time frame traders are driving these moves. We're in a trading range. This is a low of week, high of week trade. Fantastic parabolic opportunity for a session trade. Not, obviously different range and volatility than some of the other pairs, but still a very high quality setup on this pair. US Canadian. So just pointing out to traders, I'm not marking off stuff in here and worried about, pushes and all that stuff. I really want to impress upon you the understanding of the high and the low, the outside. That is where you get asymmetrical risk reward. So when we're trading inside and trying to catch moves, this is where traders get chopped up. They're chasing movement. When you have a larger template thesis, day one, day two, they go parabolic on major red news. The Canadian government, U.S. CAD had major red news also at 8:30, and then Governor Macklin, I believe it was at 11 o'clock. So end of third hour, which funny enough coincides with our engulfment pin hammer reversal at the high of the week after Governor Macklin spoke. So understand that everything is timed and measured. It's very well engineered and organized. So if you're trading in here on the parabolic trend trade after major red news, as we saw on the Japanese yen and on the Swiss franc, we get to the high of the week and we're getting to the end of the hour. This is right at the end of the hour. And when the new hour ends, we can see a potential reversal. So London put in a high. We're inside of the high of the day. We've talked about when markets close out taking out a daily level. Day three, we had the 8:30 news release on both U.S. unemployment claims as well as a Canadian CPI, I believe. Sorry, it was 11:30 that Governor Macklin spoke for the Bank of Canada. So we have our initial trend trade after major red news. We can throw our universal EMA on this pair. And when we get to the high of the week, funny enough, we get our little engulfment and 2 pins to the high. And also we're at the end of the hour. We're getting near the end of the hour with our engulfment. We're heading into 11:30. And sure enough, as that market collapses down, no major reaction from Governor Macklin, but we have our high of week engulfment reversal. This is a 5-minute chart for an easy 50 pip collapse back down. So an example, again, similar to the Swiss franc, we have a 3-day trading range. Day one, day two, putting in our high and low, opening range, initial balance. They pump it up 3 levels to the high of the week on major red news with momentum. It's 25 to 30 pips, maybe a bit more for traders on the explosion through the high. Once we get up there, how does price behave? Timings, levels, behavior of price. We get our reversal engulfment. And remember, on day 3, or when we have a reversal trade, this defies all logic. Traders are, but it's this, it's that, it's a trend trade, it's this, it's that. It's a pump and dump. That's what it is. They lift the offers, they pull the bids. It's an engineered trade template setup for them to shift money from the many to the few. The euro was also a pump and dump template, 3-day template. We have Monday our opening range, which Friday closed as a first day of breakout traders. I don't want to overlap any of this right now because I'm going to just keep hammering home. Free cash Wednesday, free cash Friday. Even when I do this and say that Wednesday's day 3 and Friday's day 3, people are still sending me messages saying, was it a day 2 trade today? Wednesday is day 3, Friday is day 3. Monday to Friday templates. Day 1 on Monday, we talked about front side, and then we break down and get a first red day on Tuesday, which gave traders a day 2 reversal trade. So we have first red day, peak formations are up on top of closing price. We talked about peak formations a couple videos ago. Go back and watch that. Lower low. First red day, what ideally I said was it's an ideal opportunity if we see a low of day broken, because lower lows on the inside in a pump and dump template is a setup for the pump and dump. Several traders hit this on the shorter time frame for 30 pips in the London window, but that put in a lower low, and that began our march back up into the U.S. unemployment numbers right at 8:30. Now, this is a 15-minute chart. This gave an excellent entry 5 minutes after the news. So again, some traders, they've said, well, I missed that. It was news. 1 minute is not necessarily needs to be traded by everybody unless you have the experience. 5 minutes after major red news, go back to work. Just get on with your day. It's normal. Now we're back to our normal work schedule. 5 minutes after the news, we have a first bar entry in line with our existing first red day backside, front side, backside, short trade opportunity on the euro. Thesis is that we already have the high of the day peak formation in place. We've made lower lows and peak formation in the London session with a lower low. We've pumped back up into closing price level into the peak formations. This is a pump and dump opportunity setup on day 3. We have a first bar entry engulfment in line with our existing thesis after major red news. We have a 1-bar stop. We're targeting asymmetrical risk reward. And so what are we targeting on this? You could target body to body at 1 full range expansion of that rectangle. So I'll just keep reinforcing that. I use the bodies on a market like this, not the wicks. So we trap the rectangle of volume for a potential measured move. The next important thing to consider with that is how long does it take to get there. If we're 3 hours and we're still not down here and we're still kind of floating around, I'll just potentially lock in the money at the level, the quarter level, whatever that may be. We had major red news again at 10 a.m. And as I mentioned to one trader, there's nothing wrong with taking this existing trade, locking in the profits, waiting for the news to be released and getting back in. You've already locked in the money and your thesis was a range expansion. There's no problem getting back into that market. The same process applies as we did on the first bar after major red news. It's a 1-bar stop. And we're still targeting the original range expansion as a potential area for taking money off the table. Day 3 on the euro. Just pointing out the difference in a market where you're trying to sell the high and buy the low and catch the move and vice versa versus a day 3 market that can offer us a range expansion. Not every market's going to give you 150 pips. Oil, gold indexes are different than currency pairs. But these are very clean, very well-engineered templates for free cash on a day 3. Next is the British pound. So Monday opening range, Tuesday day 2. Breaks out and then coils sideways on day 3, and we make a lower low inside, back inside of our opening range high of day from Monday. Closing price from Friday can be projected across as a level. If it fell through there, fair enough, sure thing. We can use Monday's low a day. It doesn't matter, but you can see how the levels are very specific to how price reacts when it gets there. So as I mentioned on gold, traders look to counter trend when it breaks a daily level on a day 3, and you're counter trending a market that's potentially maybe on a range expansion, a high of day breakout, and a high of day on the current day is a potential range expansion day back into closing price level. But you're counter trending a day 3. It's not coming back, and there's a reason why it's not coming back, because it's going to get the money. Escalator up, elevator down. This is an example of where the market breaks out and coils sideways, breaks lower on the inside. And I hope you're starting to recognize these templates. I love this. I love when people say it looks good in hindsight, because that's what I do. I master hindsight. I'm looking for day 1, day 2, day 3 parabolic trades. This type of trade on the front side, 25, whatever, this choppy stuff in here, people are trading it. But this is the elevator down. We got the escalator up and the elevator down, regardless of major red news or anything else. As long as you're in the right direction, get in, get out, take money, don't trade it, do whatever you want. But this is a perfectly well-engineered 3-day template on the British pound. Today's high of day level has been broken on the inside, the lower low. Again, just repeating the pump and dump or dump and pump. Are they working the high or are they working the low heading into our U.S. session? We have a peak formation high of the day made in Asia. They pump it back up into that level before breaking down prior to major red news and continuing that on the news itself 5 minutes after the news. So sit there and look at your watch for 5 minutes and ask yourself if you can sit there that long and stare at it. So there's plenty of time. You're going back to your original thesis. We've already engulfed and locked in the high off closing price level. We are now targeting same type of process if we want. You can either target a level, you can target a measured move range expansion, high-low bodies, 100% expansion of the range as a potential target, meaning that you don't have to necessarily exit there. We can go back and just go back to our 15-minute chart. We'll project those levels across. Because how does it behave? What time is it? As we get closer to the end of our 3-hour window and the end of an hour, guess what? Things can change. So when we are in that existing move, which several traders did take today, this is a fantastic, beautiful day 3 parabolic opportunity. And as you see, it breaks through the low of day level from Tuesday, breaks out, pulls back, peak formation, lower peak formation high before continuing to complete that move down to the closing price level of the low of the week. So day 1, day 2, day 3, fantastic trade, British pound. Gold was a fantastic trade today. I'll just point out, wasn't the first green day, but essentially it traded as a first green day heading into the new day, Monday, day 1. And we took out the high of the week early in Tuesday and made higher highs for the dump and pump parabolic long trade on day 2. Higher highs on the inside, dump and pump template, which gave traders a beautiful parabolic range expansion on day 2. And as I projected across today, that was a potential area for a measured move down. We'll talk about that in a sec. Closing price, high day and closing price level projected back down. One full expansion targeted breakout traders from the U.S. session on Tuesday. So we have day 1, day 2. We're looking for that pump up for day 3. Little pump and dump, but we didn't get that. But what we did get was a peak formation high, and we'll just map this off on this chart before going to the next one. And then we got lower peak formation highs inside. 1 push, 2 push, 3 pushes heading into the second set of news. But I want traders to just start looking at a chart as well. You're on day 3, and want to ask yourself, we're up high, number 1. So that's the whole point. Day 1, day 2, day 3, you're up high. Look at the space. What would happen? Just hypothetically, how would you feel if you're buying up there? You're looking for the buy on day 3 for the trend trade. A couple traders that said they thought it was going to be a trend trade heading into the news. You're buying up high, and look at that space. Just ask yourself, what would happen if they started to just slowly fall through there? And that's what I mean by lifting the offers and pulling the bids. It's not supposed to make sense on day 3 because they've already got you up there, and then it's going to fall through the floor. and nobody gets a free lunch. But this was a beautiful trade, a first bar trade. We're going to look at the smaller time frame, escalator up, elevator down, for easy free cash on gold. Now, you hear me say this repeatedly. You can have a signal day, you can have a thesis, you can have a 3-day template, but what is the template, the daily template, like on the day itself? What does a well-engineered template look like? NASDAQ, same thing. Monday, opening range. Tuesday, DJ30 was an inside day on Tuesday. NASDAQ was just slightly higher high. They dumped it down, the same situation. They got you selling down low into the peak formation low of the U.S. session and the high of day breakout. That market coiled sideways before breaking out off closing price in the London session. So again, getting traders to be forced to buy high if they were looking at trading this. It's a parabolic channel. Blew up through the high of the week. Triggers breakouts, right? So you're triggering breakouts, hitting stops, whatever you want to call it, and then the reversal, and then the chop sideways. We're heading into a 4-day weekend. S&P, same thing. And similar to the other instruments, we have our high of the New York Open already taken out at the end of the day. They've traded down into the closing price level before auctioning higher. Inside day also on day 2. And then going parabolic, reversing and staying in consolidation into the close. Just not a chart that, again, I know we're heading into a 4-day weekend and wasn't even interested in touching the indexes. But for traders who did, they obviously hopefully knew to nail and bail, take the money, whether they were in the long direction or the short direction. Obviously some explosive moves, just wasn't on my radar for trading today. Not the type of setup I was interested in heading into a 4-day weekend. We'll look at oil in a moment, but I just there's lots of pairs we could keep going through. I just want to point out the templates, though. Pound Canadian, Monday's opening range, front side. Market breaks out on day 2, day 1, day 2, stays in breakout. We put lower lows in below closing price. It pumps back up into our lower peak formation high from the U.S. session in our U.S. window. One question from a trader was, I still get chopped up a bit on the timings. This is a 15-minute chart, and after major red news, we have our M structure, pin hammer, heading into our second hour for a nice collapse before the second major red news at 10 a.m. And sometimes, some traders have said, well, I shouldn't have got out. I should have just held on to it. And, one of the things that I will do occasionally is I will take the bulk of the trade off, but I might leave a trailer in knowing that we may not see any reaction on certain types of news in a well-engineered template. So that's entirely up to a trader's discretion. We already have our thesis in place. We've already traded below trapped volume. We have 3 pins into that breakout. We'll just zoom in on that. Before the major red news release, obviously the thesis is that this market is going to continue down. We can do high of day closing price as our consolidation range for potential targets. It's done 2 full expansions of that range. Again, there's several other pairs we could go through, but you only need 1 or 2 trades a week that are parabolic. Now, we had major red news, as I've mentioned before. When we have large news on the calendar, I will often look at sessions in Asia. I don't trade London. It's in the middle of the night for me. But when I was in Perth, I would look at trading in London when there's nothing on the schedule, or be under the understanding that I would nail and bail and be prepared to re-enter a trade in an existing range expansion on a day 3. Go back and watch previous videos. We talk about day 3 trades, targeting range expansions as potential risk-reward, asymmetrical risk-reward opportunities. Okay, and lastly, West Texas oil, spot crude, you can look at that too. Monday opening range. We had an inside day on Tuesday, day 2. Pump day on day 1. Obviously, we had, we can go back and talk about, the 3-day template, but we're just going to stick to Monday, Tuesday, Wednesday. We have a pump day. We're up high, but they trigger the high of the inside day on Wednesday, put in a low of the day, a peak formation low, and trade through that in the London window and collapse down into the open of our U.S. window. So this is prior to New York Open. Some traders were already in an existing move, and some traders got in the beginning of the first hour. And as I've said, sometimes I will look at oil when there's major red news on the calendar for the U.S. markets, because oil may not react the same to certain sets of major red news. And so some traders participated in a continuation of that move. But when we get down into that 100, 200, 300% expansion, we went into consolidation as we head into our New York open window. The yellow highlights the 9:30 New York equity market opens. We have a low of the day put in place in that first hour. Remember the thing I constantly say, first hour puts in a high and a low. There's our peak formation high made in the first hour. And we fall down and put in a peak formation low. The second hour trades into that low and engulfs at the open of the New York equity markets. 1 push, 2 push. Then we get our little 1, 2, inside bar 3, little bear pin hammer at the low of the day, low of the week, for an explosive reversal. This is a 15-minute chart. We'll look at a 5-minute chart in a moment, but this gave traders an explosive reversal parabolic trade right back into the low of day breakout level, low of day to low of day level, which is a range expansion going the other way, 200% range expansion, right? High, low, consolidation, range expansion back the other way on free cash Wednesday, a parabolic breakout trade and a parabolic reversal trade on West Texas oil. 5-minute chart, we can see this engulfment and the coil sideways going into the parabolic move right at the high of the first consolidation level. Put our universal EMA on there. Doesn't matter, you don't even need it to see it. But just want to talk about this in closing, the psychology. Look at this move. Like, you're over and done with. That's a lot of money in a coil like that. A 3-day setup, a 3-hour parabolic reversal. 1 hour, 2 hours, 3-hour consolidation, 4th hour continuation. The engulfment started at the end of the 3rd hour. You make money on parabolic setups. You can grow a small account fast with parabolic trading opportunities. Sit on your hands, be patient, because this type of trade outweighs all this other garbage getting chopped up, trying to trade every day, trying to make money every day, trying to get pips every day, trying to catch highs or catch lows. Step back. As I repeat, Jim Rogers, my favorite quote, just wait till the money's laying on the floor in the corner and all you have to do is walk over, bend down, and pick it up. This was an awesome week. Congratulations, traders. Fantastic moves. We have a holiday weekend on the U.S. markets. Asia and London could give traders some fantastic trades. I'm done for the week. Enjoy your weekends. Be safe. We'll continue our videos, but I'm probably done for the week trading, as I only trade the U.S. session. I'm not even interested in Asia now. It's been a pretty big week. Keep it going, traders. Keep it going and keep it growing. 1% better every single day. This is a winnable game. Master your craft. Master your emotions. Understand what setups are versus trying to trade movement. These setups will explode your trading account. Have a great day, and may the markets go with you.